Hi, I'm Steve Fleming, Partner and Portfolio Manager at Gryphon Capital. Next month, it will be 3 years since the GCI IPO. And at the IPO, we communicated 3 objectives: sustainable, predictable income, the highest risk-adjusted returns, and most importantly, when investing for income, we said we would preserve your capital. Obviously, since listing, we've had to deal with periods of extreme market volatility. We've seen falling house prices, we've seen bushfires and floods, but in particular, COVID. And while the monetary policy responses have seen the decline in traditional sources of income, including term deposits and dividends, at Gryphon, we are very proud to say that without exception, we have delivered on each of these objectives. One of the core objectives of GCI is to generate the highest risk-adjusted returns. To do this, you need a methodology for measuring risk. There are many measures of risk, but a commonly used measure is the volatility of the underlying asset prices. For GCI, this is looking through to the volatility of the asset prices of its investment portfolio. Remember, all Gryphon's RMBS and ABS investments are independently priced daily, so our NTA does move up and down. Importantly, GCI's NTA is calculated and announced to the ASX daily. If you think about the risk versus return of a bank's funding sources, the bookends are term deposits at the lowest risk level, which have no volatility but a very little return. And the highest risk is the bank's equity, which is striving for the highest returns, but also experiences the highest volatility. The closer the funding instrument is to equity, the higher its risk. Hence, asset price volatility is higher, and hopefully you'll expect a higher return. GCI invests in secure bonds, which are low risk, but importantly for GCI investors, generate a higher return than some higher risk alternatives. That is, it has attributes of strong risk-adjusted returns. Put simply, you are achieving more return but taking less risk. GCI's ratio of investment return to its asset volatility is exceptional. If you are seeking an income alternative on a risk-adjusted basis, GCI is providing one of the highest risk-adjusted returns in the market. The second core objective of GCI is to provide sustainable, predictable income. Since GCI's IPO, even though the markets haven't been predictable, GCI's income has been, always exceeding our target returns. As evidenced by GCI's portfolio construction and investment performance, Gryphon has an extremely disciplined and downside risk-focused approach, while taking full advantage of the market dislocation presented during the COVID-inspired market stress. When investing for income, capital preservation is paramount and a core pillar of Gryphon's investment process. It is also one of GCI's core objectives. Gryphon builds our investment portfolios so that they are resilient to downside shocks. The portfolio needs to be able to withstand the unexpected. You could say that in the last 3 years since the GCI IPO, we've been tested, and the GCI NTA has been resilient to all of these shocks. During the extreme COVID-inspired stress, yes, credit spreads widened, and this was reflected in the market prices of GCI's investments, which went down, but only by 2% or so. Most importantly, GCI's investors' capital was secure. Remember, Gryphon invests in secured bonds with multiple layers of bondholder protections, and each and every position must pass a rigorous stress testing, which proved more stressful than COVID. We want all our investors to be informed, so I would encourage you to visit our website, and if you haven't already, please register to receive our updates straight into your inbox. Thank you for your time.